want to get a bottom. Remember, if these are long-term stocks that you are holding for a long-term, again, long-term time horizon, this is what I'm stressing right now. You can average down into your position. So if your idea was I wanted to own 100 Apple stocks, you know what I'm saying? Get 10 stocks every week or every 2 weeks. From now, you like, I think it's gonna get worse. I don't really think this is the bottom. Just get 10 stocks now, then get 10 stocks another 2, and just trail down into your position. And then by the time you have 100 Apple stocks, you got to the goal you wanted, and sit on them shits for 5-10 years. And I'm telling you, if your time horizon, like I said, I'm gonna reiterate for anyone who joined later, the people who bought stocks, if you went all in the day before Lehman crashed, you held, 10 years later, you would be up. So this is the importance, and this is why time horizons really matter and are really important. And if you want to get serious with investing, you really got to get out of the mode of instant gratification. I mean, you can get instant gratification from trading, but again, you're going to take losses too. So if you don't know how to understand to take those losses with the wins, it's not gonna feel that. It's not gonna feel that instant, especially if you overtrading your position and you down overall. So people just have to understand this is investing is a game of patience. It's like poker. It's really a game. It's really who can have the most patience and who can hold their hand the longest. You know, Apple isn't going anywhere. So when Apple stock goes down in price, does that mean Apple is now going to be a failing business because the stock went down? No. If you think they're going to be even better than they are 10 years from now, why wouldn't you buy right now? And it's just as simple as that. It doesn't need to be any much more complicated than that. So with this episode, I kind of wanted to do I don't want to say a coronavirus recap because the pain, nobody can even calculate the pain right now. You know, I've spoken to people at various funds and hedge firms. A lot of people are even projecting at earliest June people are looking at. So even when you hear people thinking things are going to get back to May, like most firms are projecting June at absolute best case scenario, earliest start of a recovery. No one's expecting that V recovery. No one's expecting it to shoot back up as high because there's going to be, first of all, no one knows what the future's going to hold. We don't know how many infections we're going to have. Now you have firms even floating the idea of gradually releasing people back into the workforce, meaning as the coronavirus testing gets more sophisticated and just general screening measures get more sophisticated, people who have higher antibody levels to the coronavirus are going to start getting allowed to go to work first before everyone. So everyone's, again, these are things that are getting floated right now. So we are going in uncharted water, uncharted territory, uncharted times. No one could predict exactly what's going to happen in the future. But what I wanted to do with this episode, especially since there's so much uncertainty and whipsawing, is I kind of wanted to break down things we do know going forward and things we don't know, but we can speculate upon. And how you want to speculate upon, you do your own research on each of the topics and you figure out what you think is going to happen. You make your plays based on that. I mean, that's what everyone else is doing. That's what we all doing. So, off top, we know Corona's going to get worse. We know, I wouldn't be surprised if our numbers are even fudged. The American numbers are fudged down. We can all observe just from social trends, people doing all this shit to go viral on social media, throwing kickbacks and shit like that. We know this shit's gonna get worse. So with that being said, you gotta look at the market, and even any play you make, and you look at the stock and you look at its performance, you gotta say, all right, how much of this is priced in already? And is all of everything that's happened priced in, or have they priced in future deteriorations in whatever, I guess, our condition? Because, you know, we're trying to flatten the curve, but who's to say the curve doesn't really get flattened that much? Have these considerations been priced into these companies? You know, you got a whole strip in Vegas that's completely out of business, and that's just their entire business is tourism and conference events. That's all Vegas lives off of. and gambling. I'm sorry, which gambling's tied into the tourism. You have literally every industry they have dead out there in Nevada. Like, how long can that be sustained? Like, is 3 months, is when you look at like a company like MGM, have they priced in no gambling for 3 months, which is like really unheard of? There's never been a time in history where that could happen. Like, is that priced in? Because you don't even have sport. Even if they had sport events, you could offset some of these casino losses with sports betting, but you don't even have sports events going on, so there's no sports betting going on. So like, how much of this is even factored into their price? But again, a company like MGM, I don't even know how much they're down currently. Hold on, an update. Damn, shit's looking like markets are going lower. Shit, the market, what time is it? Oh, it's 9:25. Dow's currently down 3.85. S&P down 3.85. NASDAQ down 2.95. So we'll see. It's looking like markets edging lower. I'm hoping for a real big drop during the day, man, because I got some spot puts that ain't been doing too good. But anyway, so we know shit's going to get worse with that. We don't really know how much of that is priced in. So whatever move you make, you definitely want to price that in. There will be more bailouts. That's a fact. Like, this ain't even a possibility. There's probably going to be 2 to 3 more bailouts at least before this is all said and done. In what shape or form? And I will, and understand that I'm including massive infrastructure bill as a bailout, because that's government spending in order to facilitate a spur in the economy. So it is a bailout because taxpayers inevitably have to pay for that. So there will be at least 2 or 3 more bailouts. So again, this is why time horizons matter, because none of us can necessarily say when or where those bailouts could come, because remember, the bailouts could come on 2 angles. You got like the congressional one that was written out, but all this quantitative easing that the Fed does, these are essentially bailouts. They're just bailouts that aren't going through legislation. They're just being done directly through the Treasury, through whatever, little money markets maneuvers they do to the back end plumbing and finances. So even with those bailouts, again, this is also tied into why we won't have a straight line going down, because those bailouts is going to probably boost the market back up a little bit, and then, it go back down. Son, these niggas is playing. This is all a scam, by the way. This whole shit. This is one big scam. So I just want you to understand that. Like, we understand this whole macro financial, this whole global financial structure is made out of thin air. We're not even going to get into that, but money is illusory. This shit is really a concept that we provide value to, but the shit they do, this shit doesn't even make sense. There's no mathematical basis behind it, because the money isn't hedged against anything. It just gets printed out as much as they need it. Which actually ties into another thing that we do know. The dollar will have to weaken. This is inevitable. Other governments are actually already calling for actual U.S. intervention to facilitate that, which I don't think is necessarily, they won't do it out directly, but they will do it in the form of all these bailouts, because essentially all these bailouts, when you print more money through the Treasury, you're inflating the monetary supply, so you're essentially weakening the dollar. Each of our dollars is worth less as more get printed out. Now, the reason why the dollar has to weaken, and the reason why I say it has to weaken, and this is like inevitable, most global commodities, talking about corn, soy, oil, etc., and most foreign debt is priced in dollars. So even, for example, China could have a contract with a country in Africa that, owes them debt and has to pay them back. But the terms of that contract and everything in the contract is priced out in US dollars. So a strong dollar puts a strain on the entire economy globally, because all of the commodity prices now go up, and all of the debt that nations have, whether it's to other nations, to banks, companies, to nations, it doesn't matter. All of the debts, it basically strengthens, because as their own currency within their respective countries declines and the dollar strengthens, you create a gap in value, and that gap is still represented in the contract because it's priced in American dollars. So this is something that is going to inevitably have to happen, just in order to ease the global pressure, because we're all intertwined. All global markets are intertwined, so there's no such thing as, Europe and Asia going into a depression while America's in a boom. Like, it just can't work like that. We all essentially, because we're so intertwined financially through these back-end channels, have to go up together and kind of go down together. All right, so the market start up. Let's see what S&P is. What's SPY at right now? SPY at 248. Oh, let's go. Keep it going. Keep it going. Shouts out to my niggas that was still faithful and had SPY puts. I lost like 5 bands last week on SPY puts. I'm sick of real shit. But anyway, let's see. Hold on, I got this list of the shit we do know. So we went over the dollar got to get weaker. We went over time horizons. We don't even talk about that. Oh, another thing we got to price into the market. So now we see this growing sentiment of suspending stock buybacks and dividends. Now you got companies proactively doing it, volunteering it, because a lot of people at this point understand that any future bailouts, first of all, the future bailouts probably won't be as rushed as this last one. They had to do something immediate to help people instantly, but the future bailouts will have a lot more congressional involvement, and you're going to have a big push, especially in the House that's democratically run, for any company to get these bailouts to suspend buybacks and to suspend dividends. So with that being said, you got to factor in these. You have to factor in these things into pricing. You see Carnival the other day. Carnival already kind of took the L, and they realized they're not really going to get no government funding. So now they're selling bonds to market, and they actually said the bonds they're selling, they're 3-year bonds. I forgot how much they're trying to raise over the 3 years, but the 3-year bonds pay out 12%. So some dude's gonna cop it because niggas got to pay them that money off the bonds. So you're gonna have a lot of companies looking to get financing through non-traditional means, like selling their own bonds, et cetera, et cetera. So again, we got to price all this in. So even with this retracement where we had the market bounce back up, a lot of people were bouncing back. A lot of people were purchasing into companies with the assumption that they would still get dividend payments. Because again, these people have long time horizons, but some people with those long time horizons still want the dividend payments in between. But that's just how they roll. They buy equities that have dividend payments. So now when you suspend dividend payments on a company, that changes the whole dynamic. That changes the entire investor sentiment on the company, and they may not necessarily be as high on the same company they were high on before finding this out. Hold on, this shit. What they doing over here? Where we at right now? Where S&P SPY at? SPY still at 248. All right, it's all good, man. It's all good. SPY puts, man. I need y'all niggas to go cop. Well, y'all don't have to go cop SPY puts, but we definitely, if the market makers are listening, we need some more pressure down on SPY. Real talk. So I ain't gonna keep y'all here too long. So now, real quick, let's just go into some of the speculative things that we don't really know in terms of the future. Hold on, my bad. Before we do that, the biggest thing we do know is that the government is inefficient at everything they do. So, however these aid or bailout packages get worked out, I'm pretty sure things will be facilitated pretty expediently on the corporate bailout end. But there's gonna be massive issues with how these unemployment payouts happen, how the that regular, the $12,000 payout is $1,200 payout is gonna happen. I just already I'm pretty sure we can bank on massive issues with that going forward, because again, we got a couple of things happening. Rent is due this week, so we about to see how that shit all plays out, because I haven't really seen any congressional action or legislative action, even on a state level, for any renter protections. So we're gonna see how that works out, because we have yet to see in America where half of more renters decide not to pay rent for a month. So this is probably something we're going to see in the very near future. How does that play out? Will there be future protections provided to renters going forward? There already were protections provided to